Hello everyone, welcome back to this episode here on Bitcoin Trade. In this episode, I'll be talking about mining rigs. I don't do any mining. I'm not really interested in any mining, but for anyone who it is, here's a little news report here. Bitcoin mining rig maker Cointerra promises free boxing for late shipments of below spec miners. So, you know, um, remember, this is very similar to like the gold rush concept. All right, now if you learned anything from the gold rush, which I did because I lived in California and that was part of Californian history, um, you know that a lot of people, well, they didn't make any money. They didn't make any money um, getting gold, all right, or panning for gold or whatever. But the people who did make money were the people who sold the shovels, the pans, the equipment. What else? They sold the land, the rights. They sold everything except gold, right? The people who made money, they sold everything except gold, right? But it's just a little history lesson, all right, everyone. And I just want to draw some parallels there. Gold rush, and Bitcoin here because it's kind of getting to that point. But in any case, the for Bitcoin to continue to exist, it needs uh, mining rigs, or I just call them what they are. They're basically just a server to be networked to process the payment of uh, Bitcoin, or process the blockchain into Bitcoin, or keep a record, whatever. Um, I don't know how exactly you get coins or how that's done per se. Um, I'm not a like again, I'm not a miner, and for most people, you won't be miners either. You'll be a user for the most part, and user being defined as also an investor. Uh, so remember that. So and users are also mining rigs, but you know they're going to be supplying bitcoins through basically the act of being a part of the network and processing. And the way they get, their free Bitcoin is processing bitcoins through the network. If a Bitcoin ever comes their way, all right. If a Bitcoin ever comes their way, so um, so some of these mining rigs are very expensive, and I don't know how much you would get or what the calculations would be, but obviously they've got to be showing some profit um, because they're sold out, right? And even though their promise of a certain specifications to the basically the computer. Okay, if you want to know what a mining rig looks like, I went up and looked at Cointerra, and there you go. That's what a mining rig looks like. Pretty much looks like your computer. But except I don't know if you ever really do anything with it other than turn it on and just connect it to the internet for the most part. So it looks like the first batch sold out, and there's our second batch. But look at the cost, almost $6,000. And this is one of the more bargain priced mining rigs here, from what I stand of the. That's what the article said anyway. Um, Now, here's my take on mining rigs. Okay, um, I'm glad people are doing it because without it, Bitcoin wouldn't work. Okay, but at the same time, there's a reason why I don't mine for Bitcoins. Okay, there's actual operating cost in mining Bitcoins. Okay, so there's real cost, real money you have to put out just to operate this computer. All right, first of all, you have to pay for it. I don't know if they take bitcoins or they're taking credit cards, cash, or whatever, but whatever the case. So that's what it looks like. If you're all wondering what what a mining rig looks like, it's nothing more than just a computer. All right, It's called mining rig. It's just a concept of this whole concept of mining. There's no mining going on. We're not going down into the earth and digging dirt up to find bitcoins. I just want to clarify that for anybody who didn't know that. Let me see. Let me see if I can get it. Okay, there we go. So let me just clarify that. Mining for bitcoins is nothing more than turning this damn thing on, and you're hoping that you might process a bitcoin and add it to the blockchain, and then doing that you're rewarded with I'm assuming the fees that's associated into you know, transporting or delivering your bitcoins. And I'm assuming that's where the bitcoins come from, or I don't know. But this concept of finding new bitcoins, I don't know. I don't know where the new bitcoins come from. Either they're generated or rewarded after you completed a block on the blockchain. So that's if a bitcoin comes your way, right? So, anyways, I'm assuming that's how it works. So just and I took this concept, or this concept may reflect how things are done in the real world, where when you complete a transaction, and hopefully you'll complete a transaction and you're charging the transaction is basically how can I say, in real world, you're obviously whatever you do, you're trying to make a gain, right? Or maybe a loss, I'm not sure, but most people try to make a gain. So usually they're charging more for their Bitcoin than what they bought it for, or they're selling their Bitcoin more than they bought it for. Put it that way. Not that they're charging more, but they're selling the Bitcoin more than what they bought it for. So there's a gain. Now there's a gain and there's a realized gain, but we'll just say it's a gain right now. And that's how you're rewarded for transacting in real life with Bitcoin. You're rewarded with the gains, either in Bitcoins or in US dollars. So this does the same thing, except it can't really go out there and actively promote any transactions. It just sits there waiting for a Bitcoin to come around to be recorded to the blockchain. I guess. I'm not sure. So that's probably why it's so difficult to actually do that. And I'm assuming I'm assuming that's the concept. Unless I'm wrong about it, but pretty much this thing doesn't do anything unless it has a Bitcoin to record to the blockchain. So there's no Bitcoins flowing through this computer. Nothing's ever going to happen. I mean, that's how I think about it. But you have some real life operating hard asset cost to doing this. Now, will it pay for itself over time? Yeah, I mean, $6,000. If you bought one Bitcoin at current price and you just sat on it, and I don't know how long it would go up to $6,000, but however long it took for that one Bitcoin that you bought on today's price, which is whatever, we'll just say 1,000, and let's just say 10 years. I'll just say 10 years that it would go up to 6,000. That's $60 a year on $1,000, 6% return year over year, but a 600% return from the start to now. I don't know, same idea as compounding interest, but except there is no interest here. All right. What's bringing the value to Bitcoin is the massive printing of fiat currency. So remember, the value of Bitcoin comes from fiat currency because that's legal tender. So, anyways, what's stopping me is basically the fact that I'm used to trading things. I'm used to transacting. This is obviously not for me, and it probably won't be for the majority of people. Um, Mainly because of the cost. Now that's the cost just to buy it. You still got to have some kind of connection to the internet in order to participate in the whole network. So there you go. So there's cost to doing that. Now, from what I understand, you could probably join a mining pool with your hardware and collectively share in any bitcoins that is transacted and then rewarded to that mining pool. So there's that's one way. Of course, I've never done that. And this is all I know about the whole thing. And so basically, you're just buying a computer, and you're just basically buying a server for the most part, and allowing people to use that server, and you're rewarded by getting basically free bitcoins. That's about it. So how many bitcoins can you get? Now I don't know how you calculate that, but let me see here. I do have a some kind of Bitcoin calculator. There's a lot of Bitcoin calculators for miners that you put in the whatever how many hash rates it goes up to. I might even do another episode or let me or I could go to on another website here. I might have to put you on stop the video, cut out, and come back in. But that might be another thing that could be explored, whether it's worth it or not. But it all depends, because the problem with technology, and we all experience this, is that the technology seems to outpace itself. And so you paid $6,000 for this. You think you're gonna make bitcoins, but you find out that later that this thing is not pumping out as much. And it could be several reasons. It could be, well, it's slower, so newer mining rigs are coming out more efficient, more faster, takes up less power, whatever. The other problem is that eventually, the amount of bitcoins being released will substantially be less over time. So you're not going to be rewarded with any more new bitcoins. But then again, the price, in theory, would go up. So you're never going to make more as time goes on. You probably just make about the same amount what you're pumping out. The only thing you have to worry about is hosting cost. If you have this in your house, that's fine. I guess you would have to worry about your electricity, and that's about it. And some other maybe hardware maintenance, things like that. But it's a constant cost to do this. But if you're willing to do it, great. I guess you can. It wouldn't be a problem. That's for people who are miners. And but I kind of looked at this, and I've in my opinion, this is my opinion. Okay. Yes, you can make a lot of money being a miner. Some of these people have been in it for a very long time, and they've reaped the benefits of being, of participating in this experiment, and it's worked out very well for them, and they're making very good money. So good for them. They should be rewarded because they stuck their neck out to do all this. But unfortunately, I think if you're trying to get into the mining rig business now, you may not get that return as the early adopters have. Okay, and mainly because we're already halfway through the amount of bitcoins that will come into existence. And from now on, it's going to get, as more and more people get into these mining rigs, less and less will be available for them to extract from the new existing pool of bitcoins. Okay, So there's that challenge because the market's going to get saturated as more popular Bitcoin becomes. Now, the issue with being a miner is you've got to realize your gains, or you got to realize gains in order to pay off any expenses. So you have expenses. You have to pay this amount back. You have to pay your electricity, and then you have to pay any maintenance and upkeep of this device. And on top of that, you probably have to continually reinvest into newer mining rigs and any hosting cost. It needs to be connected to the internet, and you need a pretty good speed to get it out there. So there's always going to be an operating cost to do this, and that's a drawback when you do anything tangible in the real world of operating a business. And so there's some, I see pluses and minuses. Okay, if you're trying to collect U.S. dollars, and that's fine. You probably need to because you need to pay off some real world expenses. But unfortunately, I think a lot of these miners aren't they're not in it for the Bitcoin. They're in it for the money. So they're probably not. I don't know if there are any miners out there who are actually going to trade, or they're just going to sell off their Bitcoins as soon as they get them, because I know these are real operating expensive, real hard costs that they got to dish out. Me, on the other hand, I'd rather trade. If I was going to put in this much, I'd rather just buy the Bitcoins and start trading them, because I would start making profit from day one on this original investment right here. And on top of that, I can actually use this money because I bought Bitcoins, and I can use the Bitcoin as money and expend it, just like I've been talking about. So for me, my investment is also my mining rig, because if I told you in the real world, this is all cool and everything, if people can actually spend and use and transact in the real world. Otherwise, you're just Bitcoin's being collected and not being processed. It won't work. So people have to really, in the real world, transact in order for this to be of any use to a miner. So you need real world transaction. You need real world things being exchanged in order for a miner to really benefit from this mining rig. Otherwise, nothing's going to happen. You're going to get a freeze of money or freeze of Bitcoin without anything going on. So there's always that issue, where liquidity becomes an issue. Of course, everybody knows about what happens when liquidity freezes. You just get a meltdown, a collapse. So I prefer myself to just trade, because if I'm going to put that much money into it, and you're gonna get your money back, but the problem is these miners, they don't see Bitcoin as anything more than a way to make U.S. dollars. Some might actually even trade. I know a few that have smaller mining rigs that give them 1 to 2 Bitcoins a month, and they trade that. So they see it as a way of getting free Bitcoins, and they're getting capitalizing on that free Bitcoin by trading it. So there's several ways you can do and get into the mining business or the Bitcoin business. This is just one way, and all it is just a computer, and all it is just processing information. But here's how I think it goes. Okay, you have this sitting around in your area. If someone in your area actually is using Bitcoin, and the Bitcoin actually has to go through this in order to get processed into the blockchain, that's probably where you're getting your free Bitcoins, is by processing an actual Bitcoin into the blockchain. Maybe I'm wrong, I'm not sure, but that's the concept that I get, and that's how you're rewarded. So if you're in a dense area where there's a lot of Bitcoin activity, you're probably going to get more rewarded uh, than if you're in Timbuktu with a mining rig where nobody's using Bitcoin. So your network's not being accessed uh, to provide any, you know, service into the blockchain or add the Bitcoin into the blockchain. So I don't know how this would work. I don't know if this computing power is able, because of the internet, you're able to take this computing power and then be shared. Maybe that's what a mining pool is you're taking a computer power and being shared overall into a network. Whether you process something or you don't, but you increase your chance of actually getting some Bitcoins. So anyways, I hope this helps for anyone who's interested in getting involved into the mining rig business. I think this is a business for people who are looking for US dollars, and you have to. Unless your electricity company, your Cointerra, whoever accepts payment in Bitcoins, you're going to have to realize money in some way to pay off these expenses. So I would say good luck to everybody who's involved in mining rigs or wish to do mining rigs. There is a boom for it, but I would caution people, and you know, I'm not saying there's anything bad or good or anything. I'm just cautioning people because this is a gold rush. We are now in a gold rush to mine for Bitcoins. And if you know anything about the gold rush, you know that a lot of these people who went to California and bought all these tools and everything never made any money. Matter of fact, someone just lost money and lost, you know, a lot of money. Just keep that in mind. But if you see value in risk, and the risk is worth the reward, I would say do it. But if you've seen my episodes, you would know that you can still mine without a mining rig, because I think there's plenty of miners out there, because the Bitcoin's still flowing. You can mine with your money instead of with a mining rig. You can get what you're mining for is existing Bitcoins in the market, not new Bitcoins. And the cost of me is whatever whatever I put into it. And here's the nice thing is I can expend that at any time. I can recapture it in expenses. You know, basically using my Bitcoin as money. So basically, I'm just moving money around. You know, I put in 5,000 for a Bitcoin. I'm just saying, for example, and I'm gaining Bitcoins through trades, expending the Bitcoins, and if need be, I can actually expend my original principal, or recoup the original principal, whichever works. So there's no reoccurring cost other than trading itself, and then I'm always on the computer on the internet, but it's not costing me anything what this would cost. This would cost me a lot more than just having a computer and trade and paying the the commission fees for trading. Now, if you do it in the real world, I mean, you can really start benefiting with your trades, whereas this is, I don't know. I mean, it's a risk for people who are, you know, into this kind of stuff. They can do it, but I would say, look at maybe go into like a wanted ad or classifieds or Craigslist and look up like Bitcoin or Bitcoin mining rigs, and you'll see a lot of these things for sale. You know, they have already been outdated, or they're, you know, not processing to specs. You know, remember the maintenance of this thing. This thing does not last forever, just like any other electronics or anything else. It doesn't last forever. So if you're thinking for $5,000, you're gonna, excuse me, let me see if this thing's focusing. No, it's not focusing. Anyway, for $5,000 or $6,000, you think you're gonna make millions off of this one machine. you're probably not accounting for depreciation. Um, the return is going to be lower because the machines may not perform up to the original specs, and then you're going to be competing with faster computers as they come out. So there's some hurdles in mining, in my opinion. But then again, there's also great rewards. I'm just not into mining because I know I can take my money and mine existing bitcoins and capture bitcoins that way by simply transacting in the real world. And then, miners wouldn't mind me doing that at all because then they would getting paid the fees, or the bitcoins are rewarded for being part of the network. So, anyways, that concludes this episode here. I hope that helps. If you ever want to know what a mining rig looked like, well, it could look like this, but basically it's just a computer. As I see it, it's just a computer, processors, bunch of processors computing things. That's all it is. I don't know how exactly they get their free bitcoins or whatnot, but so that was this article here. It talks about it. If you want to look it up, let me see who wrote the article. This gentleman wrote the article in February 3rd. So, and you notice it's Cointerra is a Texas-based Bitcoin hardware shop. So, I hope this helps you guys out. Since I live in Texas too, so I don't mind promoting companies in Texas. And then let's finally go on to the chart, shall we? All right, so there we go, a little bit. So here we are, and we're going on this very long sideways trend. But I want to make a comparison on this is a Mt. Gox 6 hour, okay. And then this is the Bitstamp 6 hour, and then this is Bitsy 6 hours. So Bitsy are almost the same, but something I noticed, and I mentioned this before, this is a big difference right here. This price drop right here at this area. They both show Bitstamp, Bitsy show it, but when you go to Mt. Gox, this is the price drop. But look at this price increase right here. It's deviating, and I've already mentioned that. And on top of that, this is a slowly trending an upward. It looks a little bit more straighter compared to Bitstamp, so it looks like it's dying off. And that was the uptick compared to Mt. Gox, and a larger downtick. So, a couple reasons why that can happen, in my opinion. And I'm just trying to make sense because we're seeing some deviation here, but it could be that this uptick here, it could be liquidity or it could be volume, one or the other. I'm looking right here, and there could be some issue with either not enough bitcoins in this market, or people are really buying bitcoins, putting money into Mt. Gox, and then you see the drop here. But look at this in particular, this here versus the other indices, and that's the only thing that I don't really understand. Of course, Bitcoin is independent of any exchange, so it doesn't have to make sense. But I want to try to understand, because there's something going on right here at this range here, and it might have been several reasons. I did mention the seizure that's going on at Mt. Gox. I also had a theory about why a lot of people complain about how they couldn't get their money out of Mt. Gox because they're burning the money over there. But ultimately, I think it's just a blip for the most part, and it's come back to a normal range. Um, but I think at this point here, there was a lot of things that went on here. And in this time frame, um, basically it reached a peak, and then the announcement that a few people got arrested for money laundering, and it came back down. So this might have been involved in that money laundering case, because if you look here, you see a drive up in price, which may be related to Bitcoin liquidity, because the less Bitcoins there are on that exchange, well, the higher the value per Bitcoin, I would think. And then we have the sell off, which I think are people who actually sold off on that news. But this is unusual. It seems unusual, but let me show you another chart, and maybe this would make more sense. Okay, because I told you that Mt. Gox for me is a trader's platform, people who trade. And so if I take this and I show the lines, there's no other reason than a technical reason that this would shoot up. First of all, it would shoot up because maybe someone thought that there was going to be a breakout and from this downtrend here, and they were wrong. That could be just a simple reason as that someone put in an order, a buy order, to push the price up on a market order. So market order drives the price, and well, it didn't work, and it fell back down, and it's slowly moving over sideways to the point where it's really getting to a smaller and smaller triangle. Not sure what's going to happen. It's got a lot of potential up and a lot of potential down movement here to what it wants to do. But to compare it, I mean, with the other charts, I haven't drawn any lines on this, but just looking at this, let's have an overall look. I'm going to do a 1 day. Well, it just looks like it's just following a perhaps longer downtrend. I'm not sure. I didn't put any lines here, but it's coming to that point where it's just going sideways, and it's going to have to break out or break down. Matter of fact, let's just put. I'm not sure if any Bitstamp people out there want to see this, but let's put a line up there. Let's see where it's going. So look at that. There you go. Put a line up there. Look at what we got here. So we got this. It never moved like Mt. Gox does. So that's what I mean. I mean, this does not react in a way that Mt. Gox does, because I'm thinking Mt. Gox reacts more for people who trade. So they're watching, they're using channels, they're using purely speculative technical analysis of charts. But because we believe it, we move the price. All right. But if you look at this, it's doing the same thing, just like Mt. Gox. It's not any different. Let's go on the day of what I'm doing. The only difference is I think people are understanding more the chart analysis of Mt. Gox, and so that's what you're seeing. And if you notice, I put the same two lines. It did break, which could be a forecasting signal that this thing has a possibility of going up. But if you see this, it's doing the same thing as the other indices in general. I'll even do it with the Bitstamp or a Bitsy. So let's just make some simple lines. That's all we're doing, is just making simple lines. Let me see. I think this is going to actually be the high point. Now this one has a totally different thing. So pick an exchange and trade it. one exchange will not react the same way as the other. So if you look at this, we're bit C is kind of off on anything. Um, where it's going, I don't know. Looks like it is going to another triangle, but it has a lot more ways to go. This may only go as far as 900, whereas if you look at this chart is telling me that Bitstamp is gonna have to decide whether it's testing. So if you look at as far as chart analysis using lines, you're gonna see that. Let me see here. Where'd it go? There it is. Okay. 6 hour. Let me see if it shows up on the 4 hour. Okay. So on the 6 hour, you're gonna see this, and there's the resistance at somewhere around 850. So it's got a potential of $50 to move on the upside if it does ever break up, start going up, and it's going to start hitting. That's the resistance there. If it breaks through, it has more to go. It may hit and bounce down. We'll see how far it goes down. Let me see. Bit C, on the other hand, is, there we go. That's on the 12 hour, 6 hour. So Bitsy, on the other hand, has another $100 to go before it reaches this resistance. And so there's a lot of movement here. I see another possible line here that parallels this that could be used if in the same way. You see that? You see that right there? So if you put a line there, see what happens, and then probably another line right about here. So this is just going along on this down trending line here, and it's just skirting this resistant line. If you did draw a line between, let's say, just these last two, or something that would show something going through like this, and then you'll see that it's just breaking, trying to break out, and probably going to hit here, where Bitstamp, if you did the same thing, probably draw another line here. This is much steeper, but this has been more flat, probably just more of a ranging, but at some point it's going to hit into this, and that's going to be that's a very strong resistant line. Okay, it's not just anything. If look at it, look at the, it's a very strong resistant line. It needs to break above this, especially Bitsy, since all the miners and most the retailers are probably going to use this as the proxy standard. So it's hitting up very close to the resistant line, which happens to be also, if you look at Mt. Gox, is doing the same thing. Look, the Mt. Gox is actually getting there faster, and it's probably going to do something here very shortly on at least on, I believe, in Mt. Gox. But if you look at Bitstamp, look, Bitstamp is, as far as a technical chart analysis on just using the lines, it's doing the same thing. It's a little off, but doing the same thing. Now, if you look at Bits C, it's kind of off. It's off. I don't know why it's so different. But Bitsy's got a long way to go before it hits this resistant line. Maybe it will make a correction, because it's not sloping down, and then, I don't know. So, but there's a difference. So when you look at it this way, instead of looking at the patterns, because Bitsy and Bitstamp have the same pattern. You see that? And then you go on to Mt. Gox, and has a different pattern. But if you look at the lines, alright, if you look at the lines, you notice that this is almost the same pattern as Bitstamp. But what's deviating now is BitC. BitC is a deviating chart. So play around with the charts, have fun with it. But as far as I'm concerned, if two of them kind of match, 2 out of 3, go with your gut feeling, But it's doing very similar. It's in a similar situation as Mt. Gox. So hopefully that helps. Thank you very much. Sorry for this is being too long. Feel free to leave a comment, like, dislike, or even leave a video response. Until next time, stay tuned for the next episode.